Good day, guys. Welcome to Forex Wealth. The new name for my YouTube account will be Forex Wealth. That's where you will be able to find my account. So now I have what we call the Euro, Turkish Lira. This is something else that I need you guys to talk about. There's something that repeats itself. This was drafted last year in 2024. So, uh, what happens with what happens in Europe is that in December, for them, because they are in the northern hemisphere, it becomes winter in December. So, what they do is that they flock to the warmer countries, which in this case is Turkey. Turkey is an Arabic country that is at the door of Europe. So it is an Arabic country. I think it's the only Arabic country that has a border with Europe. So most of the Europeans, they are the rich guys. They go on holiday on December holiday to Turkey for December because it's the Middle East, and the Middle East is famous for having the desert, and it's normally the hotter areas on the planet. So what happens in Turkey is that the government of Turkey, I'm, I'm having issues with my mouse. The government of Turkey is mostly governed by what we call tourist arrivals. The what brings a lot of money to the economy of Turkey because it's a desert is tourist arrivals. They have started to the government had started to invest in military equipment like drones and all these other things. They even built a fighter jet, but most of the time, the thing that they were making money with in December is tourist arrivals. And this thing had been repeating itself year after year. I think it's in August. Let's get back to this guy. So the trade is Euro, Turkish Lira. And in Europe, uh, in December, it's winter. So there are snowfalls and there's a delay in the global supply chain, snow all over the road and many accidents and all of those things. So most of the icy parts of Europe are having issues with doing business. However, those who trade with the Southern Hemisphere, they do make a lot of money in Europe. So here, this trade, this is in 2024. I hope you can see this thing on at the bottom that is showing you the date. This is 28. The trade started on 28 August, and it went back it took off on the 30th of September, and the trade uh, ended on the 22nd of November or the 14th of November. So this trade, most of the time, the Turkish lira does not really move. It's a stagnant currency. So what happens is that we need to take advantage of the selling euro. When the euro becomes bearish and weak, that's the only time that we can take this trade. But if the euro decides to become bullish, this trade will never happen. So what happens here is that we're gonna be selling the euro based on the Danish kroner because of the correlations. At the moment, the euro is not ready to sell, but the Danish kroner has given us a bearish consensus at the moment. So The holding of this trade will be based on the Danish krona and the Turkish lira, and the tourist arrival economic indicator that repeats itself year over year. Let me show you what I'm talking about. Let me show you what do you see this? I want you just to check on this thing. You see this thing? It repeats itself over and over again. Let me show you what it looks like. Let's go back to the similar graph. So whenever it's like December time, they get tourist arrivals and the currency shows the same thing over and over again. I hope you can see that part. So uh, this is the trade that we're trying to take. But in terms of GDP and interest rate cuts, the Turkish lira is not ready to, to buy. They actually did something that is, even the unemployment rate is yet to confirm that we should buy the Turkish lira. So they did something that I was talking about not so long ago with the pound. I was saying if you cut interest rates at the wrong time, you will be forced to hike interest rates in a recession. As you can see, they cut interest rates. It was 4.25, and they decided to hike to 4.6, and then they had to cut again. So this is the crazy things that most countries do, and this is not supposed to happen. In a recession, we need to cut rates. When we get out of the recession, we need to hike rates. We should not be hiking and cutting and hiking and cutting. It shows some way of being irresponsible. So the reason why they were cutting is because the interest rates that they were looking at are around 40%, 47%, and the economy kept on, interest rates kept on collapsing. So they want to at least get back up to, 3.9, 40%. So that's the reason why they ended up cutting interest rates. And the GDP is also giving us the reason why moved from, they were bullish actually. They moved from 2.2% to 3, and then they collapsed to 2%. I think this might have been the reason why they ended up hiking and cutting. It might have been the confusion. But I believe that this year this trade may not happen, probably because of the interest rate confusions and the unemployment rate not giving us a reason to cut. However, the trade can still happen based on the tourist arrivals and the euro being collapsing due to the news releases. Okay, the euro is telling me to buy it. That's what the euro is telling me. But because of the heavy correlate, remember, in Denmark is the headquarters of Europe. So these guys are holding the economy that side. So even when I'm receiving negative economic reports on the euro, I know for a fact that the currency has to collapse. So not so long ago, I received a central bank balance sheet. I received a euro uh, a trade balance, a balance of trade that gave me the drop that I was looking for. So this tiny collapse, the dates that appear here are behind. So don't worry about the dates that you're looking at. So what happened here with the trade, the the balance of trade, Europe getting a trade deficit might have been happening because of the war and the fear in terms of capital flow, capital flowing away from Europe and all of those things. It might have happened because of that, but it's a good confirmation to me that we're getting negative reports in the euro because we want to sell the euro and buy the Turkish lira. We're expecting a bearish a bearish euro. So when we look at wage growth has been collapsing over time. It might also be influenced by this war that is happening. But these are the economic reports that I'm looking at. Because I'm looking to sell the euro and buy the Turkish lira based on the tourist arrivals. This is the only thing that is moving the market. All of these news releases, all of these economic releases on the Turkish lira are all telling me to sell the Turkish lira. So they're just telling me that the Turkish currency is not ready to sell. So let's look at the dates on this back testing system that we're looking at. So it's the 28th of August down here, the 28th of August, and the market took off on the 27th of September, and the take profit was on the 15th of November or the 22nd of November. This is what we're looking at. Now, we're expecting the same thing to repeat itself here. We received a bearish signal that pushed the market to the 50% fee, and the market coming back and pretending that it's about to sell. So, so this is almost the same thing that we're looking at here. This is where it dropped to 50%, and this is where the takeoff level is. The euro is not yet telling me that it's about to sell. Remember, we're buying tourist arrivals. These are the dates that we talked about. It started on the 28th of August. The entry was on the 30th. It starts here. The entry was on the 30th of September, and the take profit was on the 14th of November. We are looking forward to the same thing repeating itself. The move is not that big, but what we are buying here is 1,184.8 points per night that we hold. Okay, this is the swap that will be paid to your account for holding the trade overnight in the short direction. So if you're going to be selling this currency, you're going to get paid. Let's talk about these points in the form of percentages. For each daily candle, this is the daily, for each daily candle that you hold this trade, you're going to get paid something like 1,184.08 points for holding it. Points are not the same as are not equal to percentages, but the points are very high. So what these points are doing is that they move your entry level lower. Let me show you. Let's say this is my entry here. This is my entry level. This is the stop loss. Let's paint it red, and let's look for the take profit level that is down here. The take profit level that should be what? Entry is green, the take profit level. Let's just paint the take profit level as red. So let's look for a white color. So the take profit level is on the flip zone here, which is an order block that we're looking at. So each day that you hold this short trade, you're going to get paid all of this swap, the swap that we're looking at here. So it's not about the market moving lower for a long time. It's about the swap that we're going to be collecting. So I'll be looking at this trade for some time. The market is not telling me that the euro is not ready to sell. Uh, it will be selling it in September, but it's not telling me that it will be ready to sell. And the macroeconomics on the euro are not telling me to sell. It is the Danish lira that is telling the Danish krona that is telling me to sell. So goodbye, guys. We'll see each other on the next episode. Let's hope that in November will be taking profit.